David Lee is a partner at one of the most prominent angel funds here, SV Angel. He says you have to love the work and add value to each venture if you want to succeed. And it's so great to have you finally here on Bloomberg West.
Thanks for having me.
First of all, I want to ask you, so you guys have invested in more than 100 companies over the last few years. What exactly is your strategy? Is it to cast a wide net and see what sticks?
Yeah, we really focus on a few sectors, and that's usually consumer-facing sectors, whether it be consumer internet or mobile. And then we invest in more companies at relatively smaller amounts, under the idea that it's so early and it's harder to pick, quote-unquote, the winner at that early stage.
Now, we have seen a rise in the number of angel investors. It seems like almost everyone kind of does it on the side. How has that changed the way you do your job or made things more competitive?
I'm not sure if it's more competitive, but I do know that, I mean, certainly there are more investors who, I'm not sure if it's a rise in interest, but they definitely have more access to great opportunities. So whether it's through services like AngelList or Y Combinator or Techstars, I think that's an important part in that these investors who didn't have access to these opportunities even a few years ago now can access these great opportunities, and that helps the founders as well.
So how has that changed what you guys need to do to get into the deals you want? I mean, I know you guys are one of the most prominent funds, and entrepreneurs want you backing them, but are things any different for you? I
mean, I think there is, I don't know if pressure is the right word, but there's more of an emphasis on making sure that you're adding value to founders in a distinct way. And so you're seeing, I think, a lot more investors are adding value in different ways. And I think you have to carve out your niche and try to really be one of the best at that niche.
Now, you'll see some situations like Kevin Rose, great entrepreneur, founder of Dig. He's now started this new company, Milk. It's backed by more than 20 different angel investors. Is that healthy for the company, or is that going to mean more people, want input down the line, or does it not matter?
It's really hard to say. I think there'll be more data in 5 years or so. Kevin is certainly an outlier. He's a special entrepreneur. He started Dig, and he has sort of a unique sense into product and building a company. But if you speak to founders, sometimes they'll say, well, if I can get an individual investing a smaller amount and I have breakfast with him or her once a week and they're a domain expert, that might be as valuable as getting a larger amount from a traditional firm. So it's certainly changing. And so for some entrepreneurs, it might actually be better because you have a more diverse selection of investors adding value, again, in different ways.
So of all the angels and the incubators out there, who do you think is going to survive this whole kind of explosion in angel investing?
I don't, it would be impossible for me to say, but, we talked about this a little earlier. I look at the career of my mentor and partner, Ron Conway, who's been doing this since 1994. They say that 80% of success is showing up, but I do think the hard part is the 20%. And if I were to sort of deconstruct his career and what's made him successful, it's really two things. A, he loves this more than anything, and B, he's just constantly trying to add value to founders and help them. And they're related in a way, and so I think those are the ingredients. If I just look at the data point of Ron, that's what made him successful. So if I just project that to the future, then I'm thinking maybe that's what might be successful for founders down the road.
And one thing Ron did recently was offer every single YC startup, was it $150,000 along with Yuri Milner?
Yes.
Is that part of a new strategy, or a different approach than usual going forward?
No, we decided to do that. It's actually very consistent with our strategy in terms of investing in relatively more companies at smaller amounts, not sort of pretending that we know who the winner is, and working with a more diverse and a broader set of founders, and learning through that diversification, or that diversity, excuse me.
Okay, and it seems like there are more companies out there looking for funding than ever before. So when you look at all of these companies, what do you think is the next billion or trillion dollar opportunity?
Well, a lot of this, or all of this, is really driven, any vision that we have is driven by speaking to founders at a very early stage. and just trying to glean some sort of pattern recognition. And one of the things, or one of the trends that we've seen, I mean, the first trend we focused on was social and real-time data. The second is online to offline commerce and local commerce generally. And the third is something that one of our portfolio founders called collaborative consumption. And that's simply the changing way in which some people are consuming stuff and services and experiences, and we think this is a big opportunity.
So I interviewed Brian Chesky, the CEO of Airbnb, last week, which points to this whole idea of collaborative consumption. Why do you think this could be the next big thing?
Well, if you think about Craigslist, for example, and you think about the volume of dollars that go through that platform, this is all sort of individual to individual transactions. I think you're seeing these services sort of take slices of Craigslist, rebuild them, infused with their knowledge of social data and behavior and also technology. So Airbnb, as you mentioned, is a great example. Also Zarly, Grub with us as well, which also touch on some other themes.
Now, you talked about social networking 2.0, which may be behind us. Does that mean, the social media is going to be Facebook, Twitter, LinkedIn, and that's it?
No, I think it's a different phenomenon. One of the things that we saw was that the past 5 to 7 years was about taking your offline friends and creating a social graph of them online. We're seeing a lot of startups who use technology to create new connections where you meet new people based on your interests or based on where you are. One of the examples that I said earlier was Grub with us. All this is a service where you can go to a dinner party with friends that you meet online or through this service, and you may have a shared interest or shared topic.
So how do you, at such an early stage, how do you separate hype from the next Facebook? I imagine that's such a difficult job.
Yeah, it's really hard. I think one of the things that we do in the areas where we focus, primarily consumer internet, usually founders come to us with some data. A lot of, some investors call it traction, or people call it traction, but it's just data. We want data demonstrating that there's something unique, that the founder has hit on a unique chord. And then we also look at something that we call founder market fit. Mark Andreessen famously talked about product market fit, which I think is the best way to think about investing. We look at founder market fit, where I think certain founders lend themselves to certain markets. It could be because they're scratching their own itch. It could be because they've been working on this research problem their whole lives, or it's just because their particular personality fits the industry. And so that's something that we try to focus on, but because it's about human talent evaluation, it's just really, really hard to do.
And about talent, the war for talent in Silicon Valley, has been talked about a lot lately. How do you advise companies at the early stages how to find the best people?
Yeah, it's really hard because everybody is using the same techniques, everybody's fighting over the same people, and if there was sort of a cost to sort of the increase in the number of startups, it would be this sort of war over talent. And so we're seeing people find people through word of mouth, through friends of friends, new services like HackRooter, they're coming up to really address this problem.
All right, David Lee of SV Angel will be continuing to watch where you guys place your bets. Great to have you here.
Thanks for having me.
On Bloomberg West.